Go to Facebook. Start broadcast.
The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. How everybody's doing? Happy Wednesday. This is Neil Green again with you on the weekly webinar, just like every Wednesday, same time at 2 o'clock GMT time. 2 o'clock p.m. GMT time, and I think today we have a very, very interesting webinar. I would like to welcome you guys on GoToWebinar, and of course you guys on Facebook Live that are joining us today. So welcome. How everybody's doing? Okay. Can you have a chat window, you guys on GoToWebinar. You can write me down if you have any questions. You guys on Facebook, if there's any question, anything you would like me to clarify, to repeat, you would like me to answer any question, you're more than welcome just to write it down. Okay, I'm here every week. What I'm doing every Wednesday, just giving you at the same time every Wednesday I'm here, giving you the needed information in the market. Okay, to help you out, guys, to make decisions in the market, to build your portfolio, and to trade smartly. Okay, what we're doing is to trade smartly. In order to trade smartly in the market, what you need to understand is how the market works, and what we're doing here once a week, usually if it's not a technical webinar, what I'm doing during the webinars is talking about the fundamental events and the events that are taking place in the market, and how can we take advantage of these events in our trading portfolio in order to try to make profit. So as you probably know, guys, this is our homepage at ITRADER.com. By the way, if you want to join the next webinar, of course it's for free. Okay, let me just show you technically how to do it. All you have to do is to scroll down here and go to join our webinar, click on save me a seat, put in your first name, last name, and email, and then you're more than welcome, to join for free and listen through the website itself. I'm saying it specifically to you guys that are listening on the Facebook homepage, in order for you to know for the future. Okay, so everybody's here. Are we good? Can we start? That's good. You guys on Facebook, if you have any questions during the webinar, of course I'm going to leave some time for Q&A session at the end, but you're more than welcome to write me down. I'll try to answer all your questions in between. And I want to try to do some interactive webinar today for the first time, and try to let you guys be part of it, okay? And if you have any questions, anything, okay, we're gonna try to make it more interactive today, talking about the market. So if you're ready, I'm ready. Let's start. Okay, cool. So we're talking about the earnings season trading, Q1 2017. Actually, we had the same topic last week. Okay, last week we talked about the first quarter of 2017. The earnings season takes place four times a year, 4 quarters. The first one is actually now. We're doing the earnings season right now. It takes about a month, okay, till mid-May. Which means that all the big corporations, all the big companies in the United States are handing out their reports, okay? And follow these reports. If we know how to read these reports, and you can scroll on the Facebook page or on YouTube to the last webinar and listen to how we read reports. I'm not gonna repeat it today because it's a whole webinar, but last time actually I talked about how to look at to go to the inside of the inside information of the companies that has stocks out there, and how to read the reports, and how do we make decisions based on these reports. So earnings season trading. Before that, you know what? I want to start with something else. Do you know what happens in the market? Let's open the MetaTrader. Let's open the chart and be smarter. Okay. Who knows what's going on in the market these days? You know what happened to yesterday? Okay, do you know what happened yesterday? You can write a comment about it. Okay, yesterday, okay, in the market, we had, I don't know if you heard about it, okay, I just want to give you an overlook. Let's put the earnings season aside for just a moment, and I want to talk about what's going on in Britain, in the UK right now. Yesterday, Theresa May, which is the Prime Minister of the UK, of England, have decided to set a date for elections. Actually, it was approved like an hour ago, on June 8th. Now, I don't know if you all know, on June 24th, okay, there was a referendum in the UK, and the English people have decided to do the Brexit. Brexit is one word for British exit, which means, because of many reasons, the UK have decided, the UK citizens, by 51% to 49%, they have decided to leave the EU, the European Union, not be part of the European Union anymore. Okay, and because of regulations that the European Union have on the UK banks, for example, and because of the immigration problem, and so on, many reasons for them to decide to leave. And then the last Prime Minister just resigned, okay, the same day, and Theresa May became the Prime Minister of the UK, of England, in order to try to set the Brexit. And then yesterday she said she needs elections. Why do we go to elections? Okay, why have she decided to go to elections on June 8th? The reason is pretty simple. Theresa May right now don't have a lot of power in the English Parliament. Okay, and she needs to go through the Brexit, and it will be very difficult to do so without enough power in the Parliament. So she have decided to set a date for elections, which is June 8th. What happened yesterday? Okay, as you can see, let's go back to the Brexit decision first. Let me show you something. The Brexit decision took place right here. Let's go back. This is the daily chart. What you see here, each candle represents one day. In this case, it's the pound, the British pound versus the US dollar. This is the daily chart. You see, one day, which means that each candle that you see here represents one day. A green candle means that in this specific day the pound got stronger versus the US dollar, and when we see a red candle, it means the opposite, and means that in this specific day the US dollar got stronger versus the British pound. Now let's go backwards to the referendum. At the UK referendum, by 51% to 49%, the British people have decided to leave the UK. This is the Brexit. This was the decision. The Brexit itself didn't take place yet. I'm talking only about the decision. On June 24th, pound went down versus the US dollar from 1.48, okay, all the way down to 1.32, and the day after even down to 1.32, which is a lot, okay? This was a huge opportunity if you know how to trade it, to go with the US dollar against the British pound. Now, this is the Brexit decision, okay? When Theresa May is asking the mandate from, from the English people to get the power in the parliament to go through the Brexit, so right now the Brexit is under a lot of, it's kind of cloudy, it's a lot of, under a lot of doubt. And when people of the world doubt it, look what happened to the British pound. It went up. Okay, because of many other reasons, but I'm just giving you the general reason for that. And this is a huge opportunity right now, this trend. On the other hand, you know what happened when a currency is getting stronger? Usually when a currency is getting stronger, the stock market is going down. Okay, and it's pretty simple to explain it. Think about it. If I have $100,000, okay, in the bank, and I don't know where to invest it, whether to put it in the bank, okay, in a checking account or a saving account or whatever, or to take this money and buy stocks, right? Now, if I take the money and put it in the bank, if I buy pounds, I have to sell something. What do I sell? I sell stocks. Okay, let's take a look at the FTSE, which is the UK index, including the 100 companies or stocks with the highest value in the UK. And you see, this is a daily chart again. Yesterday, the stock market in the UK went down. Okay, currency got stronger, and the stock market went down. So this is what happens right now in Britain. Okay, we had I don't know if you heard a referendum in Turkey, for example. These things are affecting the market strongly. Look at the USD versus the Turkish lira. Just a second. let's find it. USD. There you go. You see all these movements here? Okay, a lot of gaps. Okay, it was very, very volatile, a lot of opportunities. Okay, back to the earnings season. I just wanted to give you, short brief of the market right now. Back to the earnings season, and let's talk about. Okay, so major first quarter earnings are being published in the U.S. Okay, right now all the big companies in the United States are handing out reports for their accomplishments, profit, loss, EPS, and so on for January, February, and March. Okay, first quarter of 2017, first earnings season in 2017. All right, the banking sector is under a lot of pressure, and let me explain why. Okay, let me give you the reason to the pressure that has the banks has right now. On the night between November 8th to November 9th of 2016, Donald Trump was elected to be the president of the United States. Okay, he became a president on January 20th of this year, 2017. Now, after the elections, Donald Trump, one of the major things, he said two major things. One is to cut taxes, which means the corporations and people are going to have more money available. If I pay less tax, I have more money. And the other thing was government spending. Okay, in rebuilding America, make America great again, and he was trying, to do good stuff for the Americans. And what happens in reality is he needed to get the money from somewhere. Now everybody heard about the Obamacare, right? The insurance, the health insurance, the government was participating in like paying for the citizen, which is billions and billions of dollars. So Donald Trump actually have decided to try to cancel the Obamacare. Maybe you heard it on the news, and by that save a lot of money to the government, and then he could cut taxes and do some government spending because he had some spare money. But Donald Trump, okay, I don't know if you know, but during the elections, even a lot of the Republicans went against him. Okay, they didn't go hand to hand with him on his ideas, and right now he doesn't have as much power in the Congress, in the American Congress, as he thought he will have. I'm sorry. All right. So what actually happens is he was trying to cancel the Obamacare. Right now it doesn't really happening. Okay, so he doesn't have some spare money. He didn't cut taxes yet. Okay, and we look at the first 100 days of the presidency usually to understand, where it's going. Right now it's 100 days past since January 20th, and Trump did actually, sorry to say that, but nothing. Okay, except for bombing in Syria. Okay, he did nothing for the U.S. economy. So at the beginning, because of the expectations, the market is based on expectations, the whole market went up. If you look at the U.S. indices, looking at the U.S. indices, okay, the stock market in the United States, the first days, let's take the Dow Jones, represents the 30 companies with the highest value. This is November 8th. You see the election. Since then, market went up and it got to the highest level ever. Right now, this is a daily chart. Each candle is 1 day. Right now, it's it started to chill a bit. It's going down. See that? Nasdaq represents S&P 500. 500 it looks the same. Nasdaq kind of look the same. All the U.S. indices, the stock market these days is going down after a very, very sharp uptrend because of the expectations from Donald Trump. But after the Obamacare, he wasn't able to cancel the Obamacare, and it caused some financial troubles, and then he won't be able to cut taxes, which he promised he will do, and to do the government spending that he said he will do. He's actually doing nothing right now, and as you can see, he talks a lot. And as you can see right now, the U.S. market chilled a bit, and U.S. dollar same. Look at the U.S. dollar versus Japanese yen, for example, went up and then got weaker. So a lot of uncertainty right now in the market, especially because of Donald Trump, and a lot of pressure on the banks. Okay, so back to PowerPoint. PowerPoint. There you go. So the banking sector is under pressure. Okay, one of the reasons was that when Trump was elected, he said that he want to deregulate, which means taking regulations off the banks. Now, after canceling the Obamacare, it didn't go through. Nobody really knows. He didn't cut taxes and so on. Nobody really knows if he can really take off regulations from the banks, right? So it's kind of bad news for the banks because they thought regulations will be off. Right now, he cannot do that because of the Obamacare situation, and it stayed the same. Regulations on banks stays the same, even though we expected, as Trump said, that he's going to deregulate the banks. So the banking sector is under a lot of pressure, and the banks are the first to actually report during any all the financial stocks are the first to report during the earnings season. So Goldman Sachs, the biggest, one of the biggest banks in the United States, is trading around 5% lower on a disappointing report. Okay, KBW is the index of banks index, which is a banking index, is trading 1% lower. So we can see that right now the banks, which are very high correlated, they're all domestic in the United States, very high correlated, in a down trend. Okay, which is a huge opportunity for us as traders, because we can make money when the market is going up or when the market is going down by selling. Okay, so we can work both ways, and I think this is the best time to trade US bank stocks because of the pressure, because of the deregulation of Donald Trump. Okay, let me show you what's going on with Goldman Sachs. Okay, we got a trend right now, and the trend is your friend, guys. Hug him. Okay, this is Goldman Sachs. This is a daily chart. As you can see, these are the elections. November 8th, Goldman Sachs went up by 30%. That's a lot of money. That's huge money. And then, you see, went up to the highest point ever. This is the report. The report was not good. Let me just show you on CNBC, for example. Here, I opened Goldman Sachs for you. Earnings. You see, this was the last report. Refreshing. Good. This was the last report. Goldman Sachs reported first quarter. You see here? Look here. Goldman Sachs reported first quarter of 2017 earnings of $5.15 per share on April 18th, which was yesterday, right? Dismissed the 5.31 consensus of the 18 analysis covering the company. So the EPS, the earning per share, and what is earning per share? We talked about it last webinar. The revenue of the income, the net income of the company divided by the number of shares. So we know how much money I made per share. Was lower than expected, and I can tell you right now that the whole report was worse than expected. You can see on the chart itself, if you open the MetaTrader and you open Goldman Sachs, right now it's down 5%. So the banking system is under a lot of pressure right now, and they're all very, very high correlated. So if we look at JP Morgan, we're gonna see the same thing going down these days. If you're going, this is all the deregulation that Trump have promised, and right now the situation in the market, that the whole stock market is going down. See, the elections here went up, and the president is not doing what he promised. So Citibank stock right now maybe a bit stronger, and Bank of America going down in the past few days. Goldman Sachs just had a bad report. You can read about it and see. Okay, so this is what's going on right now. So if you want to start trade with something, you can always start trade on US banks, stocks. It's the best time. This is the best period in the year to do that, since the reporting right now, and under a lot of pressure, very high correlated between them. This is one thing, all right? Traders can diversify their portfolio and trade a complete bank trade. What does it mean? I always recommend, doesn't matter what you want to trade on, to diversify their portfolio, which means don't put all the eggs in one basket and take one trade with all your money. It's just a suggestion. You can do whatever you want. But in order to do the right risk management, okay, we got to know how to split the risk by taking a few positions and not put all our money on one trade. Okay. Now, major U.S. banks are highly correlated, as I said. Okay, as you saw, when since they're all domestic, they all work in the United States. They don't have a lot of branches out of the United States. Okay, and since that, when Goldman Sachs is going down, okay, right now with the pressure, J.P. Morgan is going down, Citigroup is going down, Bank of America, Wells Fargo, and so on. All the U.S. banks, okay, are trading very, very low, and they're very volatile. So huge opportunity for you to take advantage of this pressure in order to build a portfolio, and of course diversify, not put all the eggs in one basket. Major U.S. banks highly correlated. Other U.S. banks under pressure are, as I said, J.P. Morgan, Citi, Wells Fargo, Bank of America. Okay, so we saw what happened on Goldman Sachs. We can take advantage with the other stocks in order to try and make profits. Let's go on. We talked about the bank sector in the earnings season, since they're the first to publish, to hand out the reports, which is very important. We understand where it's going. Okay, Goldman Sachs 5% down after you went 30% up after the election. We talked about the reasons. We have the other U.S. banks very high correlated. We said we should diversify our portfolio. Okay, take all of this together, put it aside, and let's talk about the technology sector in during the earnings season. So, high expectations from technology sector. The FANG stocks will publish in the coming weeks, each one in another date, 25th, 26th, 24th of the month, in a few days. Okay, so the FANG represents Facebook, Amazon, Netflix, and Google. All right, these four stocks. Stock correlation: Amazon and Netflix are generating demand for live streaming. Okay, just in general to tell you what's going on in the world. The world is going kind of, I would say, if we had a TV and then we had the cable TV, right now the whole world is going for live streaming because of many reasons. It's much less expensive, right? To watch a movie or whatever you want to watch on Netflix. Okay, it's much cheaper than pay to cable TV, right? So the whole world is going to live streaming, and the advertisement, okay, on this live streaming, okay, usually belong to either Facebook and Google. Since Facebook and Google advertise via streaming platforms, you have to understand that around 70-something% out of the advertising that you watch it anywhere on the internet is either by Facebook or by Google. Okay, these two giant corporations have a lot of branches, okay, and they kind of control the whole internet. So when we see advertisement, someone in Facebook or Google is making money right now. Okay, since the world is going to live streaming, which means taking us people out of the cable TV and put us to watch whatever we consume through the internet, and we're exposed to this advertisement, okay, means we're exposed to Facebook and Google. All right, so Facebook, Google, Netflix, and Amazon, the FANG stocks, this is the term, they're all very, very high correlated. And so if we know, just like the banks, all right, when we build a portfolio, again, we would like to diversify, split the risk, not put all the eggs in one basket. If I want to trade on banks, I can trade on Wells Fargo Bank, Goldman Sachs stock. I can trade on J.P. Morgan. I do a bank portfolio, okay, and then I build a portfolio, and even if one stock went against me, the other went with me. So I made money. Same thing with the technology. Okay, in a few days they're going to publish, so you can do both. All right, you can trade on U.S. banks right now, and you can open your positions in about 4 or 5 days on the technology stocks when these are going to publish. What was important for me is to make you understand why they're very, very correlated. And another thing that I want to say is that the technology stocks, all right, the technology corporations are much less sensitive than energy stocks or commodity stocks or bank stocks, much less sensitive, the technology stocks, to politics. Okay, Google don't really care what Trump is saying, right? Oil cares. If you want to trade on crude oil or Brent oil or whatever. Banks are very, very sensitive to politics, and so on. The technology sector, much less sensitive, works by its own. Okay. Okay, guys. Let's do this. I wanna do it more interactive and see from you. You have when you click like, you have like a few options, right? Like a heart or whatever. It's let's go like this. If you think, all right, if you guys personally think that it will be more, if you think that the bank sector, okay, is more attractive, I would like you to click right now on the like, okay, on the like button. If you would like to go with the technology sector, I would go with the heart, for example. Okay, I just want to see how many of you think that the technology sector is more attractive, and how many of you think that the bank sector is more attractive, in order for me to try and show you other things. All right. In the meanwhile, I will continue. So, of course, we talked about it last time. The PE ratio. Okay, you can watch the other webinar that I did. PE ratio per sector. Of course, if the PE ratio is higher, it means that the stock is more volatile. If it's less, if it's lower, low volatility. This is how conservative traders versus volatile that like more risk. If I like more risk, which means I can make more money, but I risk more, I would go for stocks that has a higher PE ratio, and the opposite, I would go with lower PE ratio. Stock and index, of course, check the index before we trade. You can check on the last webinar. I did it last time. If I want to trade on a stock that it traded on NASDAQ, okay, I want to look at the future contract of NASDAQ before the US market is open at 2:30 GMT PM. EPS numbers and specifics as I just showed you. Traders should prepare their trading setups per stock, support and resistance levels before publication. All right, you can watch the technical analysis webinar that I showed you last time, the support levels and the resistance levels. Market sentiment considered solid but fragile. Okay. VIX, the index of fear right now is trading at 14.5. If it's above 16, reflects a volatile market. If you like it more volatile, okay. 14.5, it's lower than 16, but still a lot of volatility in the market these days. And of course, good luck. Any questions, guys? This is the time. Anything you would like to ask me, you would like me to clarify? By the way, just wanted to tell you, you guys, if you have an account with us on ITRADER.com, let me show you how to open an account. Okay, you just click on Start Trading, put in your details. You guys that have an account with us, I have an announcement to make. I don't know if you know, but as you can see here on the homepage, we are one of the major sponsors of Manchester City. Okay, Premier League. If you like football and you live in the UK, and if not, get a flight ticket, because we're giving you VIP tickets to Manchester City games in the Premier League. There are 4 games to go, 4 matches to go, and we have VIP tickets for you. All you have to do is contact your account manager, of course, for to ask for the tickets, and you got the tickets. Okay, all you need to have is an account with us, and just ask for the VIP tickets from your account manager, and you will get it. Okay, so just for you to know, this is part of the things that we're doing for the customers, such as webinars and VIP tickets and so on, because we would like you to be happy. Okay, that's in general. Any questions? All right, would you like to write me a comment or on the GoToWebinar? This is the time. If not, I will wish you a very, very pleasant evening or afternoon, and hopefully I'll see you here next Wednesday on the next topic. Visit our homepage at iTrader.com. If you have any further questions, more than welcome to contact your account manager and ask. And I would like to thank you very much and I wish you a great one. All right. Bye-bye.